Hi everyone, in this video, we will discuss how to compute for the true branch income. This topic is very important, especially when we talk about accounting for home office and branches, specifically when we meet problems that involve shipment of goods from home office to branch that is billed above cost. Let us start. First and foremost, we need to remember our formula in getting the true branch income, and that is branch income plus realized profit, and that will give us the true branch income. The branch income that we're talking about here is the branch income that is visible in the income statement of the branch. This is simply the unadjusted branch income. Then we add the realized profit, and the realized profit pertains to the allowance for the overvaluation, which is related to sold inventories. We all know that when the home office sends inventory to the branch which is above cost, the difference between the billed price and the cost is what we call the unrealized profit. And this unrealized profit is recorded under the allowance for overvaluation account. Now, when will this unrealized profit be realized? It is when those inventories, those shipments are now sold to the customer. And so therefore, we say that this realized profit, these are the allowance or overvaluation that is related to the sold inventories. And so the unadjusted branch income plus the realized profit, and so we have the true branch income. Now, we have two techniques or two ways in computing for the realized profit. We have the T accounts, and second, the income statement format. We will dwell first with the T accounts. For the T accounts, we need to familiarize ourselves with the ledger of the allowance for overvaluation. The allowance for overvaluation has a credit balance, and so its beginning balance is located at the credit side of the ledger. Thus, beginning balance. This beginning balance pertains to the allowance related to the beginning inventory. So in case the problem will not talk about how much is the beginning balance, we could be able to compute for the beginning balance of the allowance for overvaluation by working back the allowance that is related to the beginning inventory. The second debit to the allowance for overvaluation T account is the allowance for current year shipments. This pertains to the current year shipments of the branch to of the home office to the branch. On the debit side, our first item on the debit side pertains to the allowance that is related to return goods. These are goods that are returned by the branch to the home office, maybe because of defects or unspecified items. And lastly, our second debit on the allowance for overvaluation T account is the realized profit. This is now the allowance that is related to the sold goods. And this is the thing that we need to find out, no, the realized profit. And doing the arithmetic, adding the debit, adding the credit, and deducting the two, we will be able to arrive with the ending balance of the allowance for overvaluation. Now, in case that the ending balance of overvaluation is not given, we could be able to compute for the ending balance of the allowance for overvaluation by working back the allowance that is related to the ending inventory. So, beginning balance plus allowance of current year shipments minus the allowance related to return goods minus the realized profit, which is the allowance related to the sold goods, will give us the ending balance or the allowance related to ending inventory. We need to remember this one for us to be able to compute for the realized profit using the T accounts. So let's test this T account using the problem. Fisher Company opened its Tugigaraw branch on January 1. Merchandise shipments from home office during the month billed at 120% of cost is 125. Branch returned damaged merchandise worth 15,620. On January 31, the branch reported a net loss of 2,270, and an inventory of 84,000. What is the true net income or loss of the branch to be taken up in the books of the home office? For us to facilitate our problem solving, we need first to determine the givens. So based on the problems, we come up with these givens. So return inventory 15,620, shipments for the year 125,000, ending inventory 84,000. The billings are at 120% of cost, and the net loss before adjustment we have 2,270. So now, our next step is to post the correct amounts on the details provided in the allowance for overvaluation T accounts. So, I suppose that there was no beginning balance or there was no beginning inventory mentioned, and so the beginning balance must be zero. Next one is we need to be able to compute for the allowance for the current year shipments. The shipments for the current year is 125,000. And thus, 125,000 divided by 120% times 20%, and so we have 20,833. And so we post 20,833 to the allowance for the current year shipments. Our next one would be the allowance related to the returned goods. I suppose that there is a 15,620 return goods for the year. So 15,620 divided by 120% times 20%, and so we have 2,603. And so we post the 2,603 to the allowance that is related to the return goods. And so we jump to the ending balance, which is the allowance related to the ending inventory. The ending inventory here is 84,000. And so 84,000 divided by 120% times 20%. And so we have 14,000. And now we will post the 14,000 as the ending balance of the allowance for overvaluation. So our next step is to work back and for us to be able to get the realized profit, which is the allowance related to sold goods. And so you will get 4,230. And this 4,230 will now be our realized profit. So going back to the formula that we have, branch income plus the realized profit will give us the true branch income. So let's review how much was the branch income. Actually, for the year, the company suffered loss of 2,270, and so we post branch loss 2,270. And then we add the realized profit which we have squeezed, which is 4,230, and so negative 2,270 plus 4,230, the true branch income is 1,960. This true branch income signifies the real branch income, assuming that the shipments were billed at cost and not billed with a markup. So it's very easy on how to compute for the true branch income using the T accounts. You just need to remember the composition of the T accounts of the allowance for overvaluation. So now, we will proceed to the second way or technique to compute for the realized profit, and that is the income statement format. You just need to remember that our objective in using the income statement format is to compute for the allowance for the overvaluation that is related to the goods sold or the cost of goods sold. Now, very important concept is that we need to be able to recall ourselves with the income statement in get the income statement format in getting the cost of goods sold. So we have the beginning inventory, add the shipments, you minus the returns, that will give you the goods available for sale, minus the ending inventory, and we have the goods sold or the cost of goods sold. Using the same problem and using the same given, we will now plot the givens to the income statement format. Begin inventory, we have 0. Shipments for the year, 125,000. Then we deduct the returns, 15,620. And that will give us the goods available for sale for 119,380 minus the end inventory, which means that the goods sold for the period is 25,380. And from this 25,380, we will now work back the realized profit related to that. And so 25,280 divided by 120% times 20%, and so we have 4,230 realized profit. Is the amount familiar to you? Yes, because this 4,230 is the same amount that we have squeezed using your T accounts. And so therefore, whether you use the T accounts or whether you use the income statement format, we will come up with the same realized profit. Now going back to the formula, branch loss negative 2,270, then we add the realized profit 4,230, we came up with a true branch income of 1,960, both for T account technique and income statement format technique. So whatever technique that you use, we will have the same answer. It will not depend on your convenience. So that's all for the video. Thank you everyone. God bless.